Good morning. Welcome to the Financial Pillars All About the Money podcast presented by Our Neutral Voices Media. Our show is all about helping our audience understand money, mindsets, and tap into the economic knowledge that builds financially secure individuals, families, and communities. So whether you're tuning into our show to learn about budgeting, building credit, investing, or starting your own business, we're here to break down the knowledge in a real and relatable way. I'm Ryan Lepird, private banker with Star Financial Bank.
JJ Foster, Lake City Bank, loan originator.
Terrence, Greenway Bank, Universal Business Banker.
Awesome. And before we get started with you all today, I'm going to have my man JJ bring us in with a little prayer.
Alrighty, let's bow our heads. Lord, thank you for allowing us to wake up this morning. And Lord, thank you for putting us in a situation that we could spread our knowledge and wisdom and share with our community. And Lord, we ask that we can touch our community and that we have open ears out there, that someone that needs this knowledge, that can use this knowledge. It's in your name that we pray. Amen.
Thank you. So our topic today, I want to kind of build off of our last episode's conversation, which was around relationships. And we talked a little bit about the importance of teaching our youth the relationship in banking, right? Getting them used to a banker, that type of thing, so they're familiar with that. Terrence, when do you think it's too early to get somebody started in banking? When do you think the right time is?
Just from my experience, I wouldn't say there is a right time. As we are familiar with working in financial institutions, there are minor accounts, there are savings accounts that parents can have for their children that's already set up. So once they're able and they come of age, they can take over the account themselves. I think it depends on the financial situation that each individual is in. I know some parents like to start their kids off young so that they already have some financial footing and they have some type of relationship with the financial institution. If I had to go based off of my own personal opinion, I would say once they probably reach that like freshman year in high school, just because they are at that point where they are hitting puberty. Of course, you are learning new things in high school. Of course, you see teenagers always wanting to spend money. Typically, you see them always want to go out, go to restaurants, drive cars, go to concerts, things like that. They need to understand financial soundness as well at the same time. I feel when you reach your teenage years, some teenagers, I'm not going to say all of them, some of them are very wet behind the ears and they probably still think that money just grows on trees and you can just pull it out of your wallet anytime you want to. That would be a great time to get a banking relationship so they can understand how to track the money that they do receive, the money that's coming in, money that's also going out. I would say same thing when it comes to parents that typically want to add their kids onto credit cards as well to help them establish, some type of credit history. I think it depends on where the person is. Of course, there's multiple levels of understanding when it comes to finances. If you feel your child isn't ready just yet to dive into that category, I would say maybe hold off, maybe start the conversation at home slowly before you introduce them to the financial institution. But at the same time, you can still set them up like a minor account that they can still have something. So when it is time that they can still take that over. But I think it is more dependent on what the current financial situation is and the age of the child as well.
Gotcha.
Yeah, Terrence had on something that I was going to point out. You asked the age of banking, but not even necessarily banking. You can start at home. Even if you feel your child isn't ready, you might even be the banker. You might have somebody 2-3 years old, put money in the piggy bank. You save that money. We're going to go out. We're going to do this. But just teaching kids that
financial
value.
literacy.
Correct.
Right?
The financial literacy versus even, just the banking aspect.
Absolutely. So that was kind of a trick question because I don't believe that, and I think you answered it perfectly. There is no specific right age for it. Every family, every kid's can be a little bit different from that. My feeling on that is kind of like, when's money introduced to them, right? When they're going to start making money? When are they getting money for birthday gifts, Christmas gifts, things like that? When are they being actually introduced? It's never too early to start with the financial literacy and understanding money. They start doing that with JA classes coming in kindergarten, first grade, something like that. They start getting an idea of that, but actually getting their own account and learning how to manage money and count money and, saving, that type of thing. There's no right age. It's different. But I do believe, and I'm going to throw the same question to you there, is there a time period where it's kind of like too late to introduce it to them?
No. And the reason that I'm saying no to that is even if you speak to everyone in their daily lives, I was someone that grew up, and as I aged, I always felt like I should have accomplished a lot more. Every time my birthday came, I felt like, well, I should be this much farther ahead of life. I had to teach myself that it doesn't matter where you are in life, there's still time. So even if you started banking at 10 years old, somebody starts at 15, someone starts at 30. I've opened accounts for people that were in their 40s that have never had a bank before. There's no specific age. I do recommend having it when you are younger, though. I would say that just so that you are able to build some type of relationship so you have a broader understanding. As we do know, the banking industry is forever changing, always coming out with new products, new services, updating things, taking things away, making accessibility more easy for some of their clients. But if we're talking about youth, once they graduate high school, it's pretty not much more that can happen. I know a lot of people that once they graduate, they get that mentality that they're an adult and they can pretty much do whatever they please. I would say, again, like that high school range, I would probably say try to do it between those years, because once they're out of high school, I mean, they're pretty much, they have their own lives ahead of them at that point.
And I would preface it with this. You're in banking, I'm in banking, you're in banking. How many times has somebody come to you and say, man, nobody ever taught me this. I wish I would have known. So when you say at what age, I say it's never too early to lay that foundation. The sooner you lay that foundation and the more you open those doors and open that mind, that thought process, the better off the long run is going to be. Like people said, if I'd have known this, I mean, now when they come to us, it's not a teaching moment, it's a discussion. Or I heard about this, I heard about that. What do you think about? You know, it's a two-way conversation versus somebody sitting there saying, hey, I don't know. I'm putting everything in your hands. I'm going to trust what you say.
Yeah. And maybe I didn't pose that question the best of ways, because there's never a time that's too late to kind of learn that, but maybe late to the game. And you kind of hit on it there. When I was in retail banking and this, situation was in front of me more often, it always, I don't want to say bothered me, but I always questioned it when somebody was coming in with their kid and they're getting ready to go off into college, right? Or the working world or something like that. They're just now getting their bank account for the first time. And I'm thinking, like, that's late to the game. You're sending them off in the real world, learning how to have to manage their own finances with a debit card and, checks and income, whatever the case may be, right? And now it's real to them also, right? Late fees and things like that, things if you don't manage your accounts right. What were you doing during the high school age, right? Where things were a little bit more simple and there are a little bit more procedures in place from the bank that doesn't allow them to overdraft accounts and things like that in debit cards. But ultimately, when your kids introduced to money, they're making money, they're driving, right? That's the perfect time. They're driving. They should have their own debit card so they can be able to buy gas, purchase things. So it always got me when we're all sending them off to college and they're getting their bank account for the first time.
Yeah, it's funny though. Just in listening to you talk, and you talk about making money. There are some kids, you're right, that are in high school that are making money. Their parents have introduced them. They understand an account. They understand their debit cards. There's other kids who don't have to work. Everything has just been done for them. And now that you're off on college, it's just your first time being on your own. Nobody took the time to think about. Now you have to manage this a little bit on your own because, again, there's still no job in place. But the fact that you're on your own, you have your own little expenses, mom and dad are just readily available to handle certain things that they were handling when you were in the house. So I think that's where some of that disconnects come from.
Absolutely. And I'm going to give a public service announcement to the parents out there too. Don't enable your kids. Don't do all their banking for them. Make them do it as well. It always got me when mom or dad was calling up and saying they need to do this for the kid for them. Like, why are they not calling up doing this? Why are they not in here? Oh, well, they go to school. They don't have time. You probably work, right? You tell me they don't have time to get on their app. They don't have time to stop in the bank. I had an unfortunate incident with one person because they wanted to come in and change the address on their kid's account. They weren't on their kid's account, so I can't update that address on them. And they just, you have to change this address. This is my son. You have nothing to do with that. Like, it's very simple. Your son can go on the mobile app and do this, or he can stop in the bank. Just, don't enable your kids. I'm a victim of this as well. Not me personally, but my wife and my son. He loses his debit card and she's calling up trying to do stuff for him. Make him call. Get him on the phone. Get him having that relationship with the bank, used to what he needs to do to get that done. Right? Don't take care of everything for him.
Now, here's a $150 million question for you, though, Dad. You know your child, because again, I know this is a lot of parents' thought process. based off other decisions he's made, that he's not going to call. He's digging himself a hole. At what point in the juncture do you step in?
I did step in, and he doesn't listen to me. So, and to this point, I'm like, I'm in banking. Why are you asking your mom what you should do about a lost debit card? Call me, ask me. I'm going to tell you what to do. Go in the bank and do this. And to the same point, he didn't exactly do that. He found it much simpler to go online, and he had some fraud on his debit card. He would just go online and just kind of like lock his debit card when he wanted to use it. He was unlocking, doing it. Like, he did that for about 6 months. Like, do you realize you could have had a card within a few days? All you had to do was call or go in there.
Wow.
So, but sometimes we have to fail to progress in life there too. So I'm not here to hold his hand and do it. That's to my point. I could have easily done that as well for him. I'm not going to do that. If you want to sit here and lock your debit card and then unlock it when you do it and go through all that hassle because you don't want to spend fine. You'll eventually get sick of that and you'll grow out of it and realize that you should have done this a long time ago, right?
So basically you understand failure is a part of the parental process.
Yes, you have to let them fail. It took me a little bit to figure that out, but you got to let them fail and learn on their own. Don't go out and do everything for them, right, when it comes to the banking. But yeah, never too early to start. Like I said, when they first start getting money, getting used to money, getting their own money, that's what I did personally. Chase had a kind of a minor checking account that you can order with a debit card for kids as young as 7 years old. Right. It's kind of tied to the parent stuff. Everything's done online. But I opened accounts for my kids when they get Christmas money, they get birthday money. I take half of it. We put it in the bank account. It's there. They have a debit card if they ever want to use it or we want to do a special occasion. Dad, I want this. Okay, here you go. Let's utilize it. But that way they're not sitting down with a bunch of cash around. But it's getting them introduced to the banking process and the idea of what a debit card is, right?
Yeah, I will agree to that. Also, just a little off topic. It just reminds me of some of the videos that I see where parents take their children to the store and they make them pay for the things that they want. And just watching like some of the kids like break down in tears and just like, but that's my money. You need to learn this at a very young age. And I think that's very helpful for parents to teach their children money management at a very young age. Mm-hmm. They understand that, yes, you did have to work for the cash that you got, but the things that you want, you also have to pay for yourself. Mm-hmm. So I think it's a nice way to open their eyes to reality at the same time. So I will agree, once again, starting off at a young age is a great way to lay that foundation, as JJ said. And pretty much it sets them up for success in the future. Mm-hmm. Once they understand that financial literacy at a young age, that's not something that they're just going to forget in the coming years. That's something that they're going to hold on to. They're going to understand how to budget and save their money a lot better. And at the end, when it's time for them to get into the real world, they're going to have some understanding financially of what they need to do to take care of themselves. They're not going to be somebody that's lost, freshly opening up a bank account, having no idea what they're supposed to do to maintain that account. They're going to be knowledgeable of fees, how credits, debits work, how if you don't have enough money to pay for something, then you just don't get it at the time being. So again, just teaching them at a young age is going to set them up for success versus teaching them later.
Teaching them to make choices, wise decisions.
Absolutely.
Difference between needs and wants. Do you need this? No. Well, okay. Do you want this? Your money's going to go out. You're not going to have it there next time. Fortunately, I don't have that problem. My kids are crying if I don't give them the debit card. They want their debit card. They want to purchase this. And I'm like, I'm not letting you spend all your money here. Like, I'll take care of this for you. But so Terrence, when you're sitting in front of, a family or a young person like that, tell me what that process is like. What are the type of things that you're touching on that you feel it's important to teach them at a young age to get them started?
Typically, when I do sit with families, the only reason that I am sitting with the family is because it's time for the child to open up an account. Mm-hmm. Of course, I try to have the conversation with the child. I try to exclude the parent completely because at the end of the day, this is your account. If mom or dad is not on your account, mom and dad cannot help you with your account. And that is what I stress. This is your account. I said, and their parents will sit there and look at them, if you overdraft your account, I'm not responsible for this. Or if you decide to do this, I'm not going to be here to save you. Like, this is your account. So my biggest the biggest thing that I like to stretch to whoever I'm opening an account for, especially in a family setting, is your parent has an account here with us. They've maintained their account for X amount of years. These are some key things that they've done since they've had that account to help maintain a healthy relationship with the financial institution. So talking about how make sure that you're managing your account, make sure that you're taking care of your debit card, making sure that you're not just spending, make sure that if you opt into overdraft coverage, you understand exactly what you're opting into. there are a lot of ways for you to, once again, as we discussed, to misuse a checking account, to overdraft it, charge it off, or even get it closed out because you were just misusing it the way that you weren't supposed to. At the end of the day, I tell them this is almost like a lifeline to you. So this is where your money's going to be coming in. This is where your money's going to be going out. This is where your paychecks are going to go to. You know, if you decide you want to buy a house, you want to get a credit card, things like that. This is all part of your relationship. I said, and you may be at a young age, of course, you know, you can't establish credit, things like that. You can't get a mortgage, you know, can't buy a car, things like that. I said, but this is the beginning.
You're showing you can handle your finances.
Absolutely. I said, so this is a great way for you to start to understand how banking works, how to manage your money better. I said, and as you grow, I said, I will be here with you every step of the way. I was like, when you have questions, you can come to me. I said, I don't want you to feel like, you know, you need to go to mom and dad for everything. I said, because at the end of the day, this is your account. I said, if you have questions, I said, or if there's something you don't understand, you feel like you've been charged or you feel like money's missing out of your account, you need to come in and see me. You need to stop and you need to call me immediately. Same thing that your mom has already been doing. I said, pretty much your mom is going to help you understand the importance of using your account. I said, but any gaps that are also present, I said, that's where I come in as well.
Now, see, I'm listening to all that, and I know you guys talked about relationships last week, and that is key because what you're sitting down conducting a lesson. And again, to give a plug to, you know, our financial literacy pieces, if parents that need that extra assistance, I think, you know, you need to come out and learn about it because this isn't just writing the checkbook and balancing the checkbook that, you know, I grew up on. You guys both have mentioned debit cards. Debit cards is in you guys' era. Debit cards, online banking, kids with cash apps, Apple Pay, all the stuff that's linked to these accounts. When are these expenses hitting this account? Because when you talk about overdrafting, hey, you have a kid. I had $150 in my account, but I went out and I made 12 purchases. That was $350, you know, in the same day.
And things may not show up right away. They
Correct.
might show up the next day and learn how to manage that.
So
stuff.
those things need to be, you know, explained. And if, you know, a parent is not just open an account and say here, and the kid goes and you got that magic wand in their hand, it could be disastrous.
Yeah. It always, I think I've talked about this many times in this show, going back to my experience with young people all the time. It always got me where, you know, they were out there spending money and there'd be a Taco Bell purchase at 2 a.m. and it would cost them $37 to do that, right? Because of the overdraft fee.
Yeah.
Either they didn't know or it didn't bother them. You know, we'd have these conversations. You have the conversation. I'll be willing to refund the fee for you with the understanding of, you know, why this happened. Let's not do this next time. Boom, 2 weeks later, it's happening again. You know, and they get in this downward spiral of they're negative. So by the time their paycheck comes in, right? Friday hits, paycheck comes in. Well, half that paycheck, sometimes all that paycheck is gone to make up for the negative balance in their account. How do you end up getting out of that? Right. Yeah. So learning up front how to balance that and
before we go there,
make wise decisions.
Right. my illustrious co-host, you said 3 a.m. Taco Bell. We already know dang well know they don't have no money in there. Not that right state of mind. That magic wand, you swipe it. I deal with the consequences later. So
yeah, exactly. They're in the moment. I want this now. I don't need this now. I want this now. So, but that $12 Taco Bell purchase just cost you another $37 on top of it. You just spent $50-some at Taco Bell last night, right?
Yep.
Add that up a couple times a month.
Yeah. Right? I absolutely.
You know what I'm talking about, don't you?
Oh, 100%. Oh my goodness. I would have a client that would come in on a monthly basis. They were on a fixed income and they spent well over what they had for the month. And when it was time for, you know, that other payment to come in for the next month, well, I'm still showing that I'm negative like $150. So yeah, that's a lot of fees, a lot of overdraft as well. I'm like, everything that you slid your debit card for went through. You were able to get that in the now, but now you don't have any funds for the next month because you almost tripled what you were supposed to. And that's where I have to get into the importance of understanding adding and subtracting. If you spend more than what you have available, and we cover that, so that means what you owe us plus every single fee that we had to add on to that. And like you said, that $13 Taco Bell plus that $37 overdraft fee, that's like $50-some right there. That adds up. So when you're getting over $160 in overdraft fees plus the $180 that you spend, now you're in that $300-400 area of money that you owe the bank now, all because you didn't make good choices.
Yeah, and to the people out there, if you your banker's calling you, answer the phone and talk to them. We're not collection agents. I'm not calling to tell you that you owe me this money. I'm probably calling to help you out, right? Yeah. Don't hide from me because you owe the bank money. There's a reason why I'm reaching out to call you, because most banks, that's not the ideal. We don't want to handle the relationships that way. Unfortunately, I mean, fees are a necessary part of the business. We are for-profit businesses. It's a tool to help you learn to be responsible management, to avoid these type of things. But ideally, we as bankers don't want our customers being charged fees, right? It's not in the best interest. They're eventually going to go negative, can't make it up. They're going to leave because they're upset, something like that. So if we're calling you, answer the phone. Let's talk about how we can fix this. And most times when I'm doing it, like, hey, I'll be willing to refund you a few fees if we can have a conversation about how this happened and understanding of how we can avoid this in the future so we can better help you manage it, right?
Yeah, absolutely.
I was just going to say, and listening to you talk, it takes me back to like the reality store. And you sit there, you map out stuff, you explain to children and let them see it. Then they're like, okay, yeah, that don't make sense. I'm not trying to pay, unnecessary fees. But honestly, the first thing jumped in my mind, and I know, kids, you talk about $12 Taco Bell turning into $37. But you know what? Kids nowadays, Uber Eats and all that stuff, they don't care. That's just what you just said. It's $37 anyway. If I'm sitting at home on my couch, I'm paying all the extra delivery fees.
I got the Taco Bell fee, the Uber fee, and now the overdraft fee.
Yeah.
Right?
So you
don't forget the tip.
I'm not tipping nobody. I didn't have the money.
So yeah, but when you sit down and you map it out, and you told the story about the videos where parents making their kids have to pay with their own money. You remember the stories in the reality store that in reality, that was their money. And we're like, well, how are you going to do this? How are you going to do that? Oh, I got to pay for that? Oh, no, I'm going to do without.
Yeah, that happened.
Once kids, once they find out they're in control, it's like, hey, no, that's not a good idea. So,
or the ones that I don't want the iPhone, I want the basic phone because of how much it costs. Like, I never thought I was going to see that. Usually everybody will splurge on
the medical
smartphone,
insurance for me. I had this one girl, and she was married and she had 2 kids. That was the scenario that she was given. And when I showed her the price monthly for like the family plan, she said, well, can I just get like the single parent plan? I said,
they're on their own.
I'm like, you have a spouse. She was like, no, they're fine. I said, so you have dual income. I said, so what happens if your husband breaks his leg and he can't work? She said, well, I'm just going to divorce him and find a new husband. I was like, okay, all right.
We'll find somebody with 2 good legs.
Right. I'm like, so you understand that that's a large purchase that you have to make on a monthly basis. She was like, yes. I said, and you don't want to make that. She said, no. I said, so you understand the importance of your money. I said, I get that. I said, but at the same time, I said, you need to get the insurance for your husband too.
Don't worry about me and I'll upgrade later. Yeah. So going back to, one thing to touch on, the never too old to do that. One thing is parents think about, you don't want your kids, when we talk about going into college, that's when they learn how to do the banking because they don't need you on the account. A lot of times, like we'll start off parent and kid on the account. Your kids at college, they don't want you to see what they're doing and how much they're drinking and everything else. So eventually you're going to get off their account. They're going to be on their own and you can't see what they're doing, right? That's why when you start them in high school, because most banks that I'm familiar with, I'm probably all of them, when they're minors, it requires a parent or guardian to be on the account. So you actually have access to see, and you can manage that and see if they're making wise decisions with their money before they're out there and they don't have to have you on the account anymore. And now you don't know what they're doing with their money. Anything to add to that?
No, you're great. No, I was just going to say, hey, shout out. I know we got a program. Look, I always call it Teen Smart, but it's Smart Start. But just what you said, teaching those basics for the young people.
Teach them. With the rest of the time we got on the show, let's lead into credit. Like, when's too late for them to start building credit or start learning about credit, right? So we can't really, learning about credit you can do a little bit ahead of time, but they can't really start getting credit on their own till like 18, right? So,
no, you said, when is it too late? It's too late when you become an adult and you find out somebody's been using your name and you got bad credit and you never pay for anything in your life. Mm-hmm. So, again, I think it's all what we've been talking about, that checks and balances, understanding there's consequences for your actions, which you do, financially. Laying that foundation. If I borrow money, I have to pay it back. If a parent does, if I have a credit card, I get that credit card and I'm paying it off each month versus missing a payment or whatnot. Again, you're just establishing. You might not even want to, as you say, even if it's not really credit. All you're doing with credit is based off of is having a fundamental financial foundation, being fiscally responsible. That's what you're teaching. And, if you teach that as somebody gets older, then now it's like, hey, you realize what I was teaching you about was credit.
Yeah. Understanding responsibility. If you owe money, you pay the money. You got a due date, you pay that. Right. You're talking to your families and the kids, opening the accounts and everything. When do you start having that conversation about credit? When do you tell your parents that they should start looking at helping their kids build credit? And how do we go about doing that?
I take two different approaches. Of course, if the adult is comfortable with having their child added to one of their credit cards just so that they can establish some credit history, I always let them know that that is an option available for them. Or if you want them to do it themselves, I said that there's another option available, of course, and that is where I talk about secured credit cards. It's a great way for you to establish and build healthy credit over a period of time. Of course, the longer you have the card, the better. Initially, the way that I explain it, especially when it comes to a secured card, get it until you establish a decent amount of credit. You don't want to keep that forever. Personally, my opinion, you don't want to keep a secured card forever. You don't want to rack up a bunch of credit history with one secured credit card. I'd say once you get a good enough score to get like an open line of credit that's not a secured credit card, I encourage you to apply for something like that and close a secured card out and then build your credit history based off of that.
So real quick, for our listeners, what's a secured credit card? Just a brief.
Secured credit card is a credit card that you get initially by putting down a down payment. Some financial institutions will take a minimum of at least $300, maximum of about $25,000 or $3,000, just depending on the financial institution. It is secured, so if you use that credit card and you miss management and you happen to max it out and you're unable to make those payments, the security deposit that you put down for that card, which is extended the same credit line. So if you put $300 down as the security deposit, that also extends you a $300 credit line. If you're unable to make those payments, the card, of course, will be closed out, and then they will take your security deposit to pay off that credit card so that there's not extra debt that you have to pay off.
So basically a card that is a lot of times easier for somebody to get approved for, whether it's starting credit or reestablishing credit, because you're giving them some sort of collateral. You're basically giving them money that's there. If you don't pay, they have that money that they can pay it with, but easier to qualify for. So,
yep. And pretty much that's why it's called secured, because it's secured by your own finances. Pretty much after the secured credit card and the either adding your child onto your credit, pretty much I'm like, those are, I would say, the two safest options starting off, especially for younger people. I've had people come in that have gotten car loans as a way to establish credit, and typically that is never a good idea, just because since you don't have any established credit, they are more likely to give you a jacked up interest rate and a jacked up car payment.
So an important reason to start building and establishing credit early, right?
Yes, exactly. You do want those years of credit history to show up on your credit report. That is going to show consistently year after year after year. You have major payments on time, you don't overspend, and you don't max out, and you're not misusing your line of credit. At the end of the day, the more history you have, the better it looks on you, the healthier your score will be, technically, depending on conditional requirements as well. We can get into that at another time. But as far as that longer credit history, of course, if you have 10 years worth of credit history and I only have 6 months worth of credit history, you're going to look like a better option to lend to versus me. I haven't established my credit history as long as you have, but you have more history proving that you are more responsible than I am. So the longer your credit history, typically the better. Again,
so I would like to add this, because we're talking young people, and young people, this could get you a whole dug regarding credit. Don't be that person that, hey, you go buy these concert tickets, I'm going to pay you back. Don't let your friends dig your hole. Don't co-sign on anything for somebody. Hey, your friend's going to get a new car, just turned 18. They want you to co-sign or whatnot. You're just as reliable as the friend on that loan. So these are all things that I've seen, get people in trouble. So don't allow your friends to get you adverse credit. So again, unless they're giving you cash in hand, say, hey, yeah, go ahead and buy these, and you got the money, and it's easily, no, that I owe you stuff, don't do it.
Yeah, so that's, when we're talking about age, I'm a big proponent of we should start right away, the age of 18. When you're able to start getting credit, building, establishing credit, If you have a parent that is able to add you to their card as kind of an authorized signer on there, so it starts building established some credit for you, great. Not everybody has that family dynamic that they're able to do that. Have somebody. A secured credit card's a good way to go about doing it. But building and establishing credit early is important because it also leads into other things, because it does kind of give you it's kind of like your resume for responsibility, right? So when we talked on the show before about going to get insurance, it can have an effect on your insurance. How much do you pay, or getting insurance altogether? You're going to get a car, buy a car, do anything. It's going to have an effect on maybe what interest rate you get. And the important goal that we always talk about is home ownership. So we'll kick it over to you for this. If I just started building credit today, can I get a mortgage today?
If you start building credit, it puts you in good shape with that. It's all about that debt to income. But yes,
yeah.
But if you have bad credit, regardless of your debt to income, it's not going to help
But you
out.
got to have some sort of credit history.
Correct.
Right? If we're going
Definitely.
to
You gotta
get
have
approved for
established
probably
it.
the biggest asset we're ever going to borrow for in most of our lives, right, is our house, our mortgage. Therefore, you're going to need to show a good amount of credit history on there, good payback to kind of qualify for those.
Yeah,
In most instances.
Yeah, correct, definitely. And a lot of things, if there's not a credit history, and again, we talk about relationships, and if somebody that has established a relationship with our bank, they've been banking with us, we do use some non-traditional ways. If somebody's been paying rent for a number of years, we can look at that. But to your point, though, no, it definitely puts you in a good situation if you have a credit history, a healthy credit history that has already been established.
Yeah. So if you have a goal, you want to buy a house by the age of 23, 24, you got to get started early, different ways to go about doing that. So coming up on time here today, anybody have anything to add to that?
Hey, October 11th coming up.
There it is.
Next Saturday. And again, our new change time, 4 o'clock to 6 o'clock. Changed by the people. We're for the people, by the people, other people. But 4 to 6, October 11th, Fort Wayne Urban League, 2135 South Hannah Street. Come out, good information, good knowledge. We actually are going to be discussing the difference between HELOCs and refinance, the pros and cons of both. These are things, again, listening to the folks out there, that's why we're bringing the topics to you. I know Terrence talked about it on the first show, but great turnout. And we are thinking of our young people, starting to see a lot of youth come out and be a part of that. So Come on out.
Tell them about the free TV.
Oh, the free TV. Look, Terrence did such a good job. Tell him, T. If you bring friends, what happens, T?
If you bring friends, you get your name put into the drawing additionally. So if you come by yourself, of course, unfortunately, you get one. But if you bring 9 people, now you get 10. Easy way to put it. Bring your friends, bring your family, enjoy the communion, enjoy the knowledge, enjoy the food, of course. Don't forget about the food. And
Don't forget about that.
Come out, have a good time, ask some questions, meet some new people, network, do whatever you need to do. But there's no reason for you to stay inside the house on Saturday, October the 11th, specifically that date between 4 and 6. Come out, come see us. Of course, get your name in the drawing by that 3rd seasoning. Of course, we will absolutely do that drawing, and we will see who wins that flat screen.
Yeah, alrighty.
Free information, free food, possible free TV, right?
There you go.
No reason
Can't
not
beat
to
it.
be there. So,
Free, set them free.
all right, gentlemen. Thank you. Thank you to our listeners out there today. We'll be back in 2 weeks. Until then, we are Our Neutral Voices. Peace.